Hi, welcome back to Trading Hour, and let's turn our attention now to the auto sector. North America Class 8 truck orders have hit a record high in September. Sonia is here to tell us give us more details on this. Sonia.
Well, that's the big headline. There has been a significant improvement in the North American market as far as the Class 8 truck orders are concerned. A record high this time around. Whichever way you slice the data, it is looking pretty robust. On a year-on-year basis, it's a growth of 102%, and on a month-on-month basis, the Class 8 truck orders have gone up 164%. Now, Class 8 market in North America is segmented into trucks and tractors with and without sleeper cabs. So from the Indian market perspective, which are the companies that have an exposure there? Bharat Forge is up almost 9% as the company gets 22% of its standalone revenues from the North American Class 8 truck market, to which it supplies forgings. Ramkrishna Forgings as well gets 23% revenues from the North American truck market. GNA Axles is another company that gets about 30 to 35% revenues from the US Class 8 trucks. And Samvardhan Motherson or SAMIL gets about 7 to 8% exposure to the Class 8 truck market in North America. Now, many of these stocks have rallied, as I mentioned. In fact, Bharat Forge is now less than 10% away from its 52-week high. ACT Research, which is the company that puts out this data, said that OEMs have fully opened their order boards for 2023 a bit earlier than normal. And the September Class 8 orders were sensational no matter how you slice the data. Over the past 12 months, almost 250,000 Class 8 orders have been booked. So big positive coming in for that market. Back to you.
All right, Sonia, thanks a lot for getting us all of the details on the North America Class 8 orders. Let's also talk about some auto ancillary companies like Ramkrishna Forgings, which have a big exposure to the North American market. In fact, Ramkrishna Forgings gets around 20% of its revenues from the North America market. So let's talk about how things are really shaping up. Lalit Khetan, Executive Director and CFO of Ramkrishna Forgings, joins us on the show now. Mr. Khetan, good morning and thanks a lot for joining us. This is Pavitra. Now, I know that while we've spoken before, you have said that the Class 8 truck orders don't really impact you, but overall it just seems like demand is looking strong, whether it's in the North American market, even in our own market. That is the theme we have been discussing. So do you think this kind of trend can continue, or do you think a lot of this is still pent-up demand and perhaps we could see some moderation from here?
No, this kind of trend will continue. Yeah, this may look like to be pent-up demand, but certainly it's not going to moderate much. And I will say a robust demand will continue for Class 8, though there was a healthy order book already pending, a healthy order book, and this kind of demand will certainly boost further to the order book, and it signals the easing of supply chain issue basically, because this kind of acceptance of orders on behalf of manufacturer signals that, and that's a good news for the trucking industry.
Sir, in Q1, I think the order wins were about 388 crore. What's the number for Q2 and what's the outlook on order wins?
I don't have the exact number right now, but I think it's total up to Q2 is around 500 crore, and it's a process that's continued, and we hope to win similar kind of orders in near future also. So
approximately Q2 order wins should be 500 crore plus or minus, which compares with 388 crore in Q1?
No, I am talking about H1 total.
H1.
500.
So doesn't that then imply that there has been a decline in order wins in Q2 versus Q1?
See, these are the new orders for the new product and for the new customers. We never announce the regular orders, what we win. So it's it depends upon the approvals from the customers. So it's a process and it goes on.
Okay, so in terms of new orders, like to like, how would it be? Because, there are a lot of worries of slowdown in US and particularly Europe, and you have a 13% revenue exposure to Europe as well. So could you give us a like-to-like comparison in terms of renewal of orders as well as new order wins?
See, overall, if you look at the composite, we are doing much better than what we were doing earlier. And if you compare last year, it's much better. And we have earlier also said we are going to grow around 15 to 20% in exports, and we maintain that target. Combining Europe and US, we are going in both continents.
Okay, you maintain your 15 to 20% growth target. That's good to hear. Mr. Khetan, let's also talk about the domestic market because that is looking very strong. You saw almost 80% growth last quarter. Can you tell us what is the kind of demand that you're seeing in just the domestic market now?
Domestic market also remain quite robust, and we see a good demand, and demand are little bit increasing month on month. I will say it will be better than what we have seen in the earlier H1.
Okay, and sir, like you mentioned that you will see 15 to 20% growth, but one place where we did see some contraction was, of course, the margins were, of course, like the rest of the industry, you did see some contraction because of the raw material prices. But with those having cooled, do you think that that can pick up once again? And what would be the margin guidance for the coming quarters?
See, there are a lot of challenges on margins. Certainly, raw material prices in our case has not gone down, but there are other cost pressures, but there are savings also in terms of freight cost. So freight cost has gone down substantially. So overall, we need to balance and we have to improve upon the other costs to maintain the margin. And we are on track to whatever margins we have achieved so far, we will be continuing to achieve that kind of margin, or we may improve upon that.
22 to 23%, right, is where your margins have been, and that is what you're looking to maintain?
So last quarter we posted around 22%, and we will certainly posting that kind of margin, or maybe we will try to improve on that.
Okay, so you're looking to maintain margins at Q1 level, and the aspiration is to improve it. So you also recently concluded a fundraise, I think about 94 crore via warrants. But in the Q1 conference call, I was listening to it, and you did say that you have dropped your fundraise plans because of where the stock price is, and then you decided to go for a warrant issue, which is only going to help the company raise about 94 crore, and that is also once it's fully concluded. Upfront amount is going to be a lot lesser. Could you tell us, is this sufficient in terms of fundraise? What were your earlier plans? How much would you have liked to raise? How much does the business need?
Oh, we have already, you have correctly said, we have dropped our fundraise plan. This was a small fundraise only to have the promoters to increase their holding. A promoter would like to have their holding increasing to 50% plus, and that's why this is directional fundraising. And this kind of promoters fundraise, stake raise can continue by way of preferential issue. So right now, this was a small step on this direction to have a 50% promoter holding.
Okay, that is on the fundraise. Just one final question. After your Q1, in the Q1 presentation, you also mentioned that you're on the verge of entering the railway business. Can you tell us what's happening on that front? Has there been any progress?
Yeah, railway business is looking up. There are a lot of orders and traction we are seeing from the railway, and it's improving. And we can see a significant growth in the railway business in the upcoming quarters.
All right, Mr. Khetan, thank you very much for joining us. We'll leave it at that today. Thank you for joining us and taking us through your outlook. Demand looks up. The company says that they are looking to grow at 15 to 20%, and they will try to maintain margins at Q1 levels and perhaps even improve on those levels. With that, we're going to get into a short break now, but there's lots more on the market action when we come back.